Brookfield had its investor day a couple of weeks ago and laid out what the business expects to generate over the next 5 years. I promised to make video of the investor day highlights, so that's what we're going to be covering in today's video. I went through the entire 160-page presentation and watched the 2-hour-long video, and now I am going to share everything that I learned with you. I also want to apologize that this video took me so long to get out. Last weekend, I became engaged to my girlfriend, or my fiance now, I guess. And I wanted to take some time away from creating content to enjoy being together and being newly engaged. This is a huge life moment, but now I'm back and I'm ready to get back to content creation. With that being said, let's now dive right into Brookfield's Investor Day highlights. And this is the first slide right here, which kind of explains Brookfield's business. So it says, we manage capital for our investors, global sovereigns, institutions, and private individuals through our asset management, wealth distribution, and insurance channels. So this is basically what Brookfield identifies as now, is a massive global asset manager or capital manager for all sorts of investors. At the bottom, Brookfield also says that they believe they have $74 of net asset value per share now, which should also compound at 17% annually to $163 per share by 2028, allowing investors a large margin of safety. So Brookfield does still believe that their shares are very cheap and selling well below net asset value. Now, moving on to the next slide here, this says that over the next 5 years, we should be able to deliver a total annualized return on invested capital of 17%. So once again, Brookfield is showing us that they believe their net asset value per share should be about $163 by 2028, which is now over 500% above where the stock price is currently trading. So Brookfield believes that there is a large margin of safety between the share price and the net asset value today, and then especially a larger margin of safety on the share price today and the net asset value per share that they're projecting over the next 5 years. Brookfield also said that they have never been better positioned to enhance value, and they are remaining committed to their goal of continuing to deliver 15% plus returns over the longer term for their investors. Now, this slide here I thought was pretty interesting because Brookfield is saying that they believe that over the next 5 years, the business will generate $45 billion of cash, which is just insane. And why this is so interesting is because Brookfield's market cap today is $49 billion. So Brookfield is projecting to generate almost its entire market cap in cash over the next 5 years. And if they can execute on this cash flow generation over the next 5 years, then this will be absolutely ridiculous. Bruce Flatt also said that he will look to buy back shares if the shares are still trading below fair value, or his estimate of fair value. So this $45 billion could really go wherever the management feels it could be best placed. Additionally, Brookfield said that it has $60 billion of listed securities that can be turned into cash if required. These are mainly the BAM shares, BIP shares, and BEP shares, which all are publicly listed securities, and Brookfield Corporation owns massive stakes in these publicly traded companies. So if Brookfield Corporation wanted to, it could liquidate these shares and raise $60 billion of cash, which again is more than the company's current market cap today. Now, this next screenshot here shows Brookfield's estimated value of their different segments of the business. So they believe that their asset management business is currently worth about $85 billion. Their insurance business is worth about $8 billion, and their operating businesses are worth about $45 billion. That is a total of $138 billion of capital. And then the company has about $18 billion of debt that it is actually liable for. So subtracting out that debt, the total planned value today is about $120 billion. Now, on a per share basis, that's about $74 per share, which again, Brookfield believes is its net asset value on the shares today. Then Brookfield shows a quick slide here about all of the different publicly traded stocks that they own and how much those stocks were worth at the time of the investor presentation. However, Brookfield Infrastructure and Brookfield Renewables share prices have absolutely collapsed over about the past month, so their public holdings are no longer worth about $60 billion, and I actually do think that this is partly why Brookfield shares have been seeing some weakness, because BN, Brookfield Corporation, does own a large position in BIP and BEP, so when these shares decline, it does lower the company's net asset value per share as well. And therefore, BN shares do kind of trade in line with BIP and BEP shares as well. Now, moving on, Brookfield explains what their carried interest actually is. And they say, carried interest is our share of the profits we earn for our clients. So basically, carried interest is Brookfield's profits on the money that they invest for their clients. Now, with that being said, their next slide says, our carry eligible capital has grown by a 36% compounded annual growth rate over the last 5 years. So in 2018, they had $47 billion of total carry eligible capital. And now in 2023, they have $220 billion of carry eligible capital. So overall, Brookfield has a lot more capital that it is able to generate its own returns and profits on. Again, this is investor capital, but by Brookfield investing it and generating returns on it, they get a portion of those profits or of those returns. So ultimately, the more carry eligible capital that Brookfield can have, the more return potential the business also has to itself as well. Then Brookfield shows us the historical track record of some of their large funds. And here we can see that their historical track record actually outperformed their target returns. For example, on their infrastructure and renewable power fund, it's about 13 years old, and it has produced a net return of 13%, which is 2% above what they were initially projecting. Private equity has produced a 4% extra return. Real estate has produced a 3% extra return. Credit has produced a 6% extra return. And transition is too young to tell still. But these returns right here are over the past 1 to 4 decades. So Brookfield has a long track record or history of investing large amounts of capital at very high rates of return. And I believe that going forward, personally, that Brookfield will be able to continue doing this. Now, moving on to the next slide, this says driving growth in net realized carried interest to BN. $20 billion on funds raised to date, and then $6 billion on funds to be raised. So what Brookfield is saying here in this slide is that over the next decade, the company is going to realize $20 billion in cash or $20 billion in profits on their existing funds that they have already raised. So over the next decade, $20 billion of extra cash is going to flow into the business from the profits on the capital that they invest for their investors. And that's going to be Brookfield's profits. Then additionally, the company is going to generate roughly $6 billion of additional profits over the next decade on funds that they are going to raise over the next 10 years as well, for a total of about $26 billion in profit, which is more than 50% of the company's valuation today. So these are the key takeaways on Brookfield's carried interest right here. Carry is very meaningful, real, and not a matter of if, but when it turns into cash. Brookfield values its carried capital at $32 billion today, and carry capital should provide $26 billion of cash flow over the next 10 years alone. And then Brookfield finishes by saying carry is our hidden jewel in plain sight, basically saying that this is not money that is going to be reported on the balance sheet today, but it is going to be a real cash flow that the business is going to realize over the next decade, and no one is really factoring this in. At least Brookfield believes so. So to summarize this section of the investor presentation, Brookfield's global champions provide stable and growing cash flows for the business. Growth to distributable earnings over the next 5 years will be driven by asset management, insurance solutions, and cash reinvested back into the business. Carried interest will provide Brookfield with meaningful earnings as well, above and beyond recurring free cash flows. Planned value is also expected to be $163 per share within the next 5 years, generating a total return of 17% from the value of $74 today. Your entry point today can lead to even better returns as you can acquire shares at a cheaper price versus the compounding value. That is directly from Brookfield's own investor presentation. So to summarize, in 5 years, Brookfield plans to grow its distributable earnings per share by 25% annually, increase its planned value per share by 17% annually, and deliver total returns per share of 17% annually over the next 5 years. These are large returns that the company is projecting over the next 5 years for its shareholders. And then Brookfield started moving into its asset management business, or BAM in specific. And they said, our asset management business should deliver 18% growth without multiple expansion. And they are expecting the distributable earnings of BAM to be $5 billion by 2028, which is an 18% compounded annual growth rate from the $2.2 billion the company generated in 2023. So Brookfield Asset Management, or BAM, is also projected to see large returns over the next 5 years, at about an 18% compounded annual growth rate. And if these projections are met, then that is going to be pretty crazy as well. Now, this next slide from the investor presentation shows how the company believes it is going to generate $45 billion in cash over the next 5 years. So it's going to generate a little cash from its operating businesses, which are those listed securities. And then it's going to generate a large portion of cash from its asset management business, insurance solutions, and then a realized carried interest, which again is the company taking profits on its investors' capital. If Brookfield can actually execute on this plan right here and generate $43 billion of cash over the next 5 years, then that is it's honestly just insane. And I am going to be very eager to see if the company is meeting these goals and on track to actually deliver on this goal right here. Moving on to the next slide, this says, carried interest will generate meaningful cash flow, and as a result, distributable earnings should be $14 billion in 2028. So basically, distributable earnings or free cash flow should be $13.6 billion in 2028 alone. On today's $49 billion valuation, this is a 28% return in cash to shareholders in just 2028 alone. If Brookfield can hit these projections, then that will be an insane return to shareholders over the next 5 years, and especially in 2028. Now, this next screenshot shows Brookfield's distributable earnings per share projections over the next 5 years, before realizations and then after realizations of carried interest as well. And they say, if we achieve this plan, distributable earnings before realizations and distributable earnings per share should increase at 22% and 25% compounded annual growth rates, respectively, over the next 5 years. So distributable earnings before realizations of their carried interest should be about $6.34 per share by 2028 based on their projections. Now, when Brookfield factors in the realized carried interest, they're expecting about $8.41 in distributable earnings per share by 2028. Now, on a $30 share price today, if these projections are met, then that is a price to distributable earnings of 3.57, again, if these projections are met using the full realized carried interest DE per share. And if Brookfield can hit these projections, then you can start to see why they believe the business is significantly undervalued today, and why they're basically screaming at the market and at their shareholders that they believe their stock is selling for a significant margin of safety today as well. Now, moving on to the next slide here, this kind of talks about how Brookfield expects to hit that $163 of net asset value by 2028. So at the time of the investor presentation, Brookfield stock was trading for $34 a share US. Again, they believe that their planned value or their net asset value at the time was $74 per share. So basically the stock is trading for less than half of their net asset value. At least that's what they believe. Now, over the next 5 years, they believe that there will be about $35 of value created from their asset management business and carried interest, $28 per share of value created from insurance solutions, and then $26 per share created through cash reinvestment and positive returns on their cash flow. And this is how the company is expecting to hit $163 per share in net asset value. Now, what I found interesting here is that if the company can actually hit this $163 of net asset value per share by 2028, and Brookfield's discount on its net asset value per share is closed, then that could be a 37% compounded annual growth rate to Brookfield shares over the next 5 years, which is just a ridiculously insane compounded annual growth rate for its shareholders over a short time frame. So then the question becomes, will Brookfield ever actually trade at its net asset value per share? And this is a chart that someone posted on Twitter, and it shows Brookfield's share price historically versus its net asset value per share. And we can see that historically it's actually traded at or above its net asset value per share, and it was trading in that range from about 2017 to about 2021. And Brookfield's discount right now is the largest discount it's had in over a decade relative to its net asset value per share. So again, if this discount is closed over the next 5 years, and it can actually get back to trading for net asset value once again, in addition to the growth to the company's overall net asset value, then it could provide significant returns for its shareholders. And that is what Brookfield is trying to say to its investors. Now, in my opinion, the discount to net asset value is due to worries over Brookfield's real estate portfolio. Brookfield has had negative headlines highlighting how they have had multiple properties default. And with bond yields continuing to rise and interest rates most likely going to remain higher for longer than people think, people are starting to worry that Brookfield will see more defaults on its assets. And overall, this is causing some fear surrounding the company's stock price and causing it to sell below its net asset value. Now, what's interesting is in Brookfield's Investor Day presentation, they showed us their real estate outlook. And over the next 5 years, Brookfield is expecting to sell $15 billion worth of real estate. And by the end of 2028, they only want about $15 billion of real estate in their overall asset portfolio, which is down from $24 billion that the company holds today. So basically, over the next 5 years, Brookfield is actually looking to liquidate almost half of its real estate portfolio and actually make real estate a smaller portion of the business overall. This could help close that discount to net asset value, as well as potentially stopping the business from being such a cyclical stock. Now, moving on through the investor presentation, this starts to talk about Brookfield Insurance, and Brookfield believes that their insurance business should produce about $2 billion in annual cash flow by 2026. This is also only projecting a 6% return on Brookfield's investments, though. And as we saw, Brookfield has historically generated much higher yields on its investments than 6%. So if Brookfield can invest this capital at higher yields, then it will also generate more cash flow from its insurance business. And they could arguably be underselling their insurance business right here with only a 2% spread on their cost and investment yield of only 6%. Then Brookfield says, we have an unparalleled investment franchise to deploy the capital. And I agree. Brookfield has historically used its investors' capital to buy assets and invest, but insurance is now giving Brookfield a large pool of its own capital to invest now, which will also give Brookfield the opportunity to realize 100% of this large pool of capital's return on investment. So in my opinion, Brookfield Insurance could be a sleeping giant for the overall business, especially if they can invest this large pool of capital at the high returns that the company has been historically able to get. Now, moving on to the next slide, this is Brookfield's estimations of how much their insurance business is actually worth. So today, they believe that their insurance business is worth about $18 billion, or about $11 per share of Brookfield Corporation shares, or BN shares. Now, by 2026, Brookfield is expecting their insurance business to generate about $2 billion of annual earnings, which they then apply a 15 times multiple on, which gives us a $30 billion valuation of their insurance business, or about $19 per Brookfield share. Now, by 2030, Brookfield is expecting their insurance business to generate $5 billion of earnings, and the multiple to come down a little bit, probably because of growth is going to slow down. And with lower growth, you get a lower multiple of about 12x. This will still yield a valuation of Brookfield Insurance to about $60 billion, or about $37 per share of BN shares, which is more than the stock is currently worth today, by the way. So Brookfield does believe that their insurance business is a sleeping giant and is going to be worth $60 billion by the end of this decade. And if they can achieve this, then that will create massive value for shareholders as well. So those are all of the highlights that I found from Brookfield's Investor Day. I did also watch some of the video highlights, and I do have some clips, but I think that this video is starting to get a little bit too long. And I do believe that I have kind of explained Brookfield's Investor Day and why they believe the stock is so cheap today, and why insiders are buying hundreds of millions of dollars worth of shares, and why they're telling their investors that the stock is trading for a margin of safety. And if you enjoyed this video or you found it helpful in some way, then please remember to leave a like on it, as it really helps out my channel and I do truly appreciate it. Also, if you're new here and you want to stay up to date with what is going on in the stock market and with Brookfield Corporation, then please remember to subscribe to the channel, because that would also be pretty awesome. But that is going to wrap up the video for today, everyone. And please let me know what you think down in the comment section below. And also let me know what you think of Brookfield Corporation stock today. Do you guys think that it is cheap as well? Are you continuing to buy more of it? Are you avoiding it? Whatever you're doing, let me know down in the comment section below, because I always love to hear your feedback on the stocks that I discuss. But with that being said, thank you all again so much for watching. I truly do appreciate it, and I really hope to see you all again in my next video.